Hi everyone, welcome back to another weekly update. This time I will be discussing my Iron Condor and how it performed on the expiry of 8th April. Again, this is weekly Iron Condor that I do on Nifty 50. 8th April is a Thursday, so normally I initiate on the Thursday before, which is 1st of April. But being a holiday, what I thought was I would spread the iron condor across 2 days, which is something that I'm learning now. If I put all of my money on one range, it becomes difficult to manage. So I am thinking now over time, this is all learnings that I have gotten, that I would spread it over 2 or even 3 days, which means I initiated one set on the 31st and one set on the 1st. I'll walk you through what I did. So 31st, the market is at 14,800. But my thoughts are the market is still in a bearish state. It started from here, it's gone down, it's coming up, but it is possible that it might go down further because of all the COVID cases, etc. And I thought the resistance on the top would be quite close. So what I did was, my understanding is that my resistance is at 15,200 and my bottom range is at 14,300, but the 14,300 could be quite easily breached because that might be a support. So I put my support at 14,100. Given that this is my expected range in Nifty, I expect Nifty to trade between around 14,250 to 14,100 with a bit of a bearish view. What can I do to make money? I can still sell a strangle, which is sell a call on top, sell a put, but this is unhedged, which means if Nifty gaps down, gaps up, then I'll be in trouble. So what I do, as usual, I buy a CE out of the money, I buy a PE OTM, and I will convert this to an strangle to an iron condor. This is my usual strategy. So I will take you through what I have done from the 31st. So if you look at the 31st, this is the CE side, this is the PE side. I'm trying to make it more easy so to understand. So on the CE side, I sell 15,200 and I buy 15,500. I'll make a separate video on why I use a 300 point hedge. So for example, I sell this, I buy this, right? Which means my max loss is capped at 300 points for each leg. Now, and on the PE side, I sell 14,100 and I buy again 300 point away, which is 13,800. Okay. The price that I pay for these are I sold at 21.1 and I bought at 6.65. I sold at 25 and I buy at 10.75. So if I look at what the payoff diagram is, so if I look at my payoff diagram, it will look like this. Again, I'm using this next week's strikes because the previous week's strikes are not there. But what I've done is I've changed the numbers. So at least the payoff diagram will be obvious to you guys. If Nifty stays in this range, 14,100 to 15,200, then I will get 2,153 rupees. Again, I'm just using one lot to show you guys. My max profit is 2,153. The margin that I require is 52,000, which if expires properly, which I will get 52,823 times 100. So I will get about 4% return in 1 week. Of course, this is very ambitious return. So I start with about like 3% to 4%. Then I will have to make adjustments and I will lose some money. So I will, at the end of the day, as long as I get 1% per week, I am very happy. Okay, so this is what I did on the 31st. Now, this is my payoff diagram. As long as Nifty stays in the range, I will still make money. The next day, you see Nifty sort of moved up to closer to 14,900. Nifty moves closer to 14,900. So what do? I possibly think Nifty is in an uptrend, a small uptrend. I don't know if the Nifty correction will come. So on the 1st of April, what I do is I add 15,300 now because Nifty is moved up, and 15,600 in the call side, and I sell 14,300 and 14,000, and I buy 14,000. The price that I buy is 16.1, 3.9, 14.85 and 6.8. So as you can see here, I sell for 16, I buy for 3.9. So every lot, right? Every lot for every contract, sorry, for every individual share, I take 16, but I have to pay back 3.9 as a hedge. So for every share, I will make 12.2 if this expires out of the money. So lot size is 75. So each side I will make about 1,000 rupees. So if I add this, this is at the end of the first. I have taken the first, I have taken the 31st, and I've added the first also. So 31st is here, 1, 2, 3, 4 positions at the 31st. This is my fourth, this is my positions that I initiated on the first. So overall, I have 2 lots of iron condor, for which my margin required is 1 lakh. So you can see here that my premium is about the amount that I get if it expires in range is about 3,671. Don't worry of the projected loss. I mean, that is just an initial loss that is shown. So as long as Nifty expires within that range, what is the range? 14,250 is my break even. So as long as it expires above 14,250 and below 15,250, 1,000 point range, then Nifty, then I will get this money, 3,600. So which works out to be 3.6%. But next day, if you see here, Nifty just falls like crazy from 800, and yesterday's close was 870, right? Then it falls all the way from 870 to 470, 400-point move. The problem is not just one-way move. After 400-point move, it bounces back another 200 points. So it's like a V-shaped move. It comes down and then goes up. So what do I do to mitigate that? If it comes down, then these two will be in loss. Correct. So what I do is I close these two closed at loss. Okay. And this one I closed at profit. So what date is this? This is 31st. This is 1st, and this is on the 5th, right? Yes, on the 5th. So I closed this at profit. I closed these two at loss. Of course, this would be a bigger loss. This would be a bigger loss. This would be a small loss, because you have to remember that I initiated this on the 31st. Now it's 5th. So theta decay will mean that I closed this at a very small loss. This one is also not a big loss, but I still closed it at loss. So then what I did was on the 5th, I have moved this, rolled my PE down. Okay, what I did, my PE was at 15.1 and 15.2, 15.3, right? So what I did was I added 15,100, 15,300, sorry, 15,400 and 15,000 and 15,300. So I've closed one. I've added another leg of calls, and I've also closed this one, but I've rolled mine down. I think if it got to here, it can easily get here. So what my thought is, I sold 14,000 and 13,700. This I sold for 27 rupees, and this I had to buy. This one was 9.25 and hedge was 2.8. If someone wants to know, this one is 17.9 and 2.6. So here again I'm making about 15 rupees. Here I'm making about 22 rupees. This is what I had done. So at the end of 5th, my iron condor looks like this. So I have 15 15, I've closed both. Sorry, I forgot to say. I closed both at profit. I should have said yes. So now I have 15,115, 15,115, and 14,013.7. So, but I have sold two lots of this. So I've sold two lots. So now, overall, I'm in a little bit of a loss, but compared to the profit here and the loss here, because the loss will be more compared to the profit. But after this, so I will still get 1,500, 1,500 rupees if all of these are in profit. So now, next day, 6th of April, what I did was I closed this at profit, because you can see here this low was not broken. It did come down and then it came up. It closed at profit. Then I added 14,100, 13,800. Essentially, I'm rolling up, and 14,200, 13,900. So this is what I have added. So I've added here. This is still very far, here and here. Okay, I've added these two P's. So what will happen is this will give me some extra profit. That's all. So overall, this, then finally, if you see the next day, on the 8th, it went up, it got to 15,000, and then it came back down. So what I had to do was I had to lose some of my profit in this 15,000 call. So I had closed this at neutral. It was not a loss, it was not a gain. See this. This is profit. This is profit. This is profit. This is profit. So overall, I was able to manage the situation by just by rolling up and rolling down my calls and rolling up my puts. So if you notice, even though the market had fallen 400 points, here the IV would have also increased a lot, and still it went to 14,500, and again for 14,500, 14,450, it went to 14,950. So 400 point drop, 500 point up move, which is a crazy amount of move for Nifty these days. So even with this, I was able to close some at profit, some at loss. So overall, let me just take you through what my realized profit is. My realized profit, of course, this is not, the quantity is not one, but my realized profit is about 4,916. Is it a lot? Definitely not, but 4,916, and the total capital I use is about like 12 lakhs. So 12 lakhs. Okay. If you look at it, it is only 0.4%. But in these kinds of markets, right? In these kinds of markets, I am more worried about protecting my capital. I do not want to make a loss. Okay. So as long as I'm able to manage Iron Condor, if you think about it, right, this kind of market is great for trend following, directional trend following. It's like it goes down, you will still make money if you're shorting. It goes up, you will make money if you're long. So, but non-directional strategies are very difficult. Iron Condor is a non-directional strategy. So my biggest takeaway from this is, if I can manage such down moves and up moves, then a less volatile environment, I will be able to manage properly. So my idea here was to minimize my loss and save my capital. In this case, I was even able to make a small profit, which I'm very happy with. Okay. Let me know if all these payoff diagrams and this sort of summary makes sense to you guys. And of course, if you have any doubts or comments, please let me know. Thank you again for watching. Bye.